this video, we're going to be talking about the home builder sentiment and really specifically talking about home builder sentiment when it comes to buyer traffic. Now, many of you know that I work at a lumber yard. I do retail sales for a living, and I pretty much am always focused in on what's taking place within the lumber industry because, in my opinion, it is probably one of the best indicators of what it is that's taking place in the broader economy, especially when it comes to manufacturing, and how it is that people are actually feeling about the economy and participating in the economy, watching lumber and watching how it is moving, how the demand for it is taking place, how it is that it is moving through the system as far as supply chains. There is so much that can be told about the broader economy by following lumber. And people ask me all the time, when is it that lumber is going to move? And are we going to see lumber like skyrocket? Is it going to be moving up in, this dramatic fashion? Are we going to see that anytime soon? What's happening with the mills? There's a lot of questions that takes place out there. And ultimately, you're going to see more of what we have been seeing for the last year. Low inventory, low demand, mill curtailments, a lot of mill shutdowns. There's not a lot of demand for lumber, and that doesn't keep the prices from moving pretty much anywhere, right? They've been bouncing between the lows of the 500s all the way up to even as high as 650 or even a little bit more. But for the most part, those wild shifts within lumber, which would have been extremely volatile back in the day, since COVID really isn't that elevated and really isn't that volatile. So really what's taken place within the lumber industry is not a lot of demand and a very sluggish market. However, looking at home builders as the indicator to when this shift is going to take place, and a lot of times I find that people say, well, interest rates and, mortgage rates and quantitative easing and all these other things that are going to take place, that it's going to all of a sudden create this major shift to the housing market. I think quite differently in the sense that if you have a gap in production, then most likely you are going to have to fill that gap in for however long the gap was taking place in order to get back into being productive again, right? So if you slow down production and the demand, although is down because the buyer is simply not available, the demand for a home still exists. It's just the capabilities of the buyer itself is not necessarily there. So when we start taking into consideration that the demand is there, if the house availability as far as affordability was there, then there would be a whole lot of demand to meet the supply that is now currently restricted due to the fact that there's not a lot of new supply being built, and the new supply that is available is actually getting cheaper than the houses that are existing, which doesn't encourage the home builders to bring on any more inventory. So the unfortunate circumstances of having a situation in which that the ability for the buyer to not get that home because of circumstances such as low wages or elevated interest rates or something that is beyond their control doesn't necessarily give way to any kind of environment in which that the builder would want to be there. How is it that the builder is going to want to jump into this game if the buyer is not there? And even more so, if they have to reduce the house or come up with clever schemes in order to sell that house. So as long as that's the case, then most likely you're going to find a deteriorated economy. There is nothing inside of that that says, yes, we can go out there and predict that we are going to have working class individuals raking it in a particular way that then gives them the opportunity to have the American dream. Because if it isn't happening within the housing market, then it's certainly not happening within the people's jobs. It's not happening within their businesses that they're starting. It's not happening at all. So buyer traffic is the key to this. Once buyer traffic shifts, then everything will have shifted within the economy as well. But at this point, looking at buyer traffic sentiment from these home builders down around 26, and anything below 50 is negative and anything above 50 is positive, they are so far from positive at this point that the idea that any kind of return to positive is so far off in the future that there's really no opportunity for any shift to take place within the housing market. So when you think about manufacturing, well, housing, construction, that's a key component, right? Like it's not just the manufacturing of goods, things that you can sell. Manufacturing of housing is also a sign that the people are very profitable, good wages, getting the income that they need. It's showing signs that there is actual progress happening within the economy. But if you don't see that happening within the housing, then you're not seeing it happening within the economy. It, as we think about it, it makes a lot more sense that the people themselves struggle immensely, but yet there doesn't seem to be a group that is struggling. Or there is a group that isn't struggling, but when you think about who that group is, who doesn't struggle, like here you've got this K-shaped economy that everybody's talking about, and how the upper class, high wages, the income that's at the top, these people seem to be doing quite well. And you look at the luxury housing market, like the expensive homes, those ones seem to be doing all right. Expensive areas, expensive homes, these places seem to do all right in the high luxury area, where the economy seems to actually be moving, operating and participating in ways like they've always have. In fact, they seem to be actually doing much more than they ever have. And here at the lower end of things, we have a bunch of people who are witnessing and noticing the struggles of things that used to be something that was somewhat common, like buying a house. And then they ask the question, well, why is this taking place? They wonder all the time, how come it is that we have such a struggling economy? How come it is that the home builder sentiment is in the toilet with buyer traffic when there's yet a demand for homes? It's not like people don't demand them, right? I mean, I'm looking at articles talking about the homeless and how, like, the mayor of Portland was trying to get everybody off the street, like no homeless people sleeping on the streets or something like that. And I thought to myself, did not the problem get worse with everything that you tried to do? Because there's an inequality that has taken place, and the K-shaped recovery, or whatever you want to call it, the K-shaped economy is more like it, is evidence of what it is that's taken place when we have this separation between the rich and the poor. Like, to me, I don't have to really question how it's taken place. It's happening because of the people's experience with luxury. The more you experience luxury, the more you're going to find a separation between the rich and the poor. And this is the reason why you're finding such massive homelessness across the nation, especially, here on the West Coast. All the West Coast cities are just overrun with homelessness. And you have to think, well, there's a hell of a luxurious experience that happens on the West Coast. Happens in just about every major city. Where you have a concentration of wealth, you're going to have inequality that takes place. And if you have ever increasing amounts of concentration, which is evidence with the K-shaped economy or K-shaped recovery, however you want to describe it, it really comes down to that luxurious experience. And the only way they get that luxurious experience is because we have ever increasing amounts of new money that pours into the system. So now it's pretty easy to see it that there is no real way of being able to provide an economy for the working class individual to go out there and essentially have the ability to provide themselves with enough wealth to acquire a house and then have the family and the kids and all the retirement and all that other stuff when we are no longer part of the consuming part of the economy. Like, the working class used to be the consumer. They were the ones who consumed everything. And if they wanted to increase consumption, they, being the Federal Reserve, if they wanted to increase consumption, the aggregate demand, in order to combat a downturn within the economy and ultimately create an inflationary pressure, they would lower interest rates, get corporations to hire people, and that hiring of people would have extra money, right? All the money beyond the money they were already making. Everybody who got a wage increase or got a job would then go out there and spend, and all that extra spending would create the supply-demand imbalances. And this is where the Federal Reserve would find the aggregate demand within the working class by lowering interest rates and getting corporations to hire people by borrowing that money and investing into their companies. Now, since the great financial crisis, it failed. It doesn't work. And all the people who are looking at the idea that lowering interest rates is going to somehow create an inflationary scenario is very inaccurate. Right? There was a time that was the most accurate view in the entire world. Like, it was absolutely accurate. Since the great financial crisis, it failed. The Federal Reserve had zero interest rate policy for 10 years. Not 10 years. It was for a very long time. And it was close to 10 years. And during that zero interest rate policy, interest rates at zero, they failed to produce an inflationary scenario for themselves. Why? It's because all the people going to work and all those people getting their jobs and getting unemployment down to historically low levels by the end of the Obama administration, leading into the Trump administration, all those people with all those jobs and all that work and doing all those things out there in the economy failed to produce an inflationary scenario because they simply could not consume enough. They're debt saturated with student loans, credit card loans, car loans, house loans, whatever it is that's out there. They cannot go out there and get enough of an increase in wages or get a job that had enough pay to it that would give them the ability to become a consumer. They barely scratched it as it was. They were paying off their student loan debts, paying on their credit cards, taking out even more luxurious car expenses, but they did not create the consumption that would normally exist when they would lower interest rates and go to work. It just didn't work for the Federal Reserve. And you can find evidence of that by going just reading some of their speeches from 2018, especially that of monetary policy strategies of a low neutral interest rate world, which is what I talk about all the time. But seeing it taking place, and then it was just like, okay, so now we know for a fact that lowering interest rates isn't going to create the inflationary scenario. If it didn't do it for the previous 10 years prior to COVID, severing of the supply chain and stimulus packages definitely produces an inflationary scenario. All right? I mean, if you sever the supply chain and you hand people a stimulus package and you tell them to go wipe out the shelves, what do you think is going to happen to supply and demand? I mean, you can put all the money printing, all case out there all day long. Money print to go, burr prices go up. Yeah, okay, we've heard that. But you won't be able to explain that when it comes to quantitative easing 1, 2, 3, and 4. But yet you can explain inflation pretty easily through supply-demand imbalances, especially if you say sever the supply chain by telling people don't go to work, don't deliver, don't manufacture, don't restock them shelves. And here's this bunch of money, go and clear the shelves out. I mean, you guys remember how much stuff there was that was missing? And then all of a sudden there was just this overload of stuff that came in, and all these containers were sitting in the parking lots, and the ports were overwhelmed, and they were going to call in the National Guard because there wasn't enough truck drivers, and all this hell and havoc and craziness that was taking place at the time. You ever hear of the bullwhip effect? Oversupply, undersupply, oversupply, undersupply until an equilibrium is met. See, there's certain supply chains that just can't view what it is that they need as far as inventory levels. And when you zap inventory of a particular area and then you tell them that they cannot get a supply or that they're going to be limited on supply, they're going to start over ordering. If they're being allocated against and you have a order with 20 and they only send you 10, the next time you order 40 or 35 or 50, because you know that you're going to get like less than what you order. But if you put in an order for 50, then you might get what it is that you really wanted. Well, the people upline, the manufacturers, distributors, the wholesalers, they don't understand that you've done that. They don't understand that you put in an order for 50 thinking that you're only going to get 20 of it, which is what you really wanted. They think you really want 50. So now the manufacturer starts to really ramp up production. This is the bullwhip effect. This really takes place. And we saw that happen right in lumber. I kept focusing in on it. I kept telling people, don't follow the money printer saying that's what's causing lumber to go up. You're going to watch lumber go all the way back down to its normal. And then you're not going to have anything to argue why it is that it's down at its normal price. And here we are. I mean, I don't know, what was it, $535 per thousand today? In 2018, it was 650 per thousand. 2018, 650 per thousand. And today, there's an added rail cost that takes it from the Pacific Northwest over to Chicago. That was never in the previous contract. So when we compare 535 per thousand, we're actually looking at a contract that should be selling for a whole lot more, because prior to, I don't know, what it was about 4 years ago, I guess, they did not use that rail incorporated into the contract, so that added cost wasn't there. So really, lumber is about as cheap as it's ever been. And this is the reason why there's so much lumber mill curtailments and shutdowns and inventory depletion taking place right now. It's very difficult for people to see that, but me being in the industry, I see it all the time. I recognize it when it's happening. I get the newsletters that are coming in. I recognize what's taking place within the broader economy from what's taking place within lumber, just from the simple demand for it. Is that if you don't have demand for lumber, then you don't have demand for anything taking place out there in the economy. The only place that it's really taken any kind of demand is in a handful of people, the top 20% of household incomes. That's a very small fragment of the population, but yet they do enough consumption to make the numbers look good. Isn't that incredible to think? Like, I mean, it blows my mind. Here I am trying to cut back on as much expenses that I can possibly do to not be the consumer, so that I can get into a saving position, so that I can then get into assets so that they can grow or pay. And then I could actually acquire something in my life that is beyond that of my working class job or working pay, and hope that I can acquire something in my life. I'm not consuming anything. And yet you have 20% or top 20% of household incomes who are consuming enough to make up for just about 80% of the rest of the people. They do like 75% of the total consumption. 80% of the people do like 30% of the consumption. And I think to myself, man, I know I'm down there in the lesser of consumption. I don't consume nothing. Like, I keep it as low as possible. And I think that of myself, man, I try to at least get something as far as an income that's better than that of my day job. And on top of all that, I still find it very difficult, in order to not find it like a struggle, in order to acquire that position and maintain that position and continue to operate in that position. And yet there's people out there who are doing so much consumption that they can make up 70% of it. What in the world? What could they possibly be buying? What could they be spending the money on? Like, how vast of a luxurious experience must it be for 20% of the top household incomes to be able to do 70% of the consumption? Like, what is it, a beautiful experience they must be living? Because, here it is, I'm driving this old 98, 99 Explorer, got a 97 Suburban at the house. I'm trying to figure out ways to, get my expenses as low as possible while still enjoying somewhat of my life, and then I see people out there just like, there's this number out there that is just so overwhelming. Top 20% of household incomes can do that. Top 10% do 50. Think about that. Top 10% of household incomes do 50% of the consumption. They do over half of it. 90% of the rest of the households are doing the rest of the consumption out there. So odd, right? But then when you think about the Cantillon effect, well, it totally makes sense. Because it's ever increasing amounts of new money that comes into the system. People who have first access to that money, they get to spend it at face value. They get to buy into the luxurious experience. And the more they buy into that luxurious experience, what ends up happening is the domestic manufacturers can't compete with the foreign producers, who are now competing against the domestic manufacturers who have to face those higher prices. Okay? The luxurious experience drove up the prices, and that driving up of the prices has the foreign producers saying, hey, we can do it better than you can. Well, maybe not better, but we can do it cheaper, and cheap enough, and it's good enough. And then as they start to buy in, your job goes away. That's it. Now your job is gone, and people say, well, what happened? I was just like, well, do you think that maybe it was the inequality that was created because the domestic manufacturers were shipped overseas? And as we blame greed and manipulation and all the other stuff, Cantillon describes it. Cantillon describes it 200 plus years ago. There's an essay that he wrote, chapters 6, 7, and 8 of Cantillon's essay on economic theory, part 2 of that essay. In those 3 chapters, 6, 7, and 8, increase and decrease of money to the state and the further reflections upon that topic, holy moly, describes it absolutely perfectly in detail exactly how it is that your nation is going to rise from the luxurious experience of being a manufacturing powerhouse. Once you have risen your standard of living, you will start buying foreign production. That foreign production will come in and chase the domestic manufacturers out. And the more that money pours in, the more separation between the rich and the poor will occur. And then pretty soon it will only be advantageous for those who are at the top, who are getting first hands on the money, right? The people who are importing the foreign production, the foreign producers themselves, right? These are the people who get to participate in the first new money coming in. Everybody else, they're going to suffer the consequences unless they can get closer and closer to that new money. And unfortunately, working class individuals who are normally having a regular good job, those regular good jobs don't cut it anymore and they fall further and further away. Well, I don't have to look any further than the ever increasing amounts of new money that comes in. It's debt issuance, and people who are able to acquire that debt issuance and then buy cash flowing assets that put themselves on such an elevated side of the wedge that it's almost impossible for somebody down at the working class to even possibly compete. It's like you just won't be able to. Like, think about how hard you would have to work against somebody who was borrowing money and buying cash flowing assets. And then you go and like, well, how come you have a house? It was just like, well, I have all these assets that are paying me, and then now I can just go do just about whatever I want. Right? And that's what people do. And then there's other people who go like, well, I don't want to take that route. I want to work really hard. And it was just like, well, you have to work really hard against something like that. Right? And people say, well, they shouldn't be allowed to borrow that money and do that. And it was just like, okay, they shouldn't. You're right. But they do, and that's what's happening. And so whether they could or should or shouldn't doesn't really matter. That's what they're doing. And then if you are saying, I should be able to work really, really hard and be able to compete against that, you're right, you should. But it doesn't work. Yeah, you should. You should be able to work really hard and say, that's all I really need to do is just show up and be very dedicated at my manufacturing job, and that would be enough. And you're right. I totally agree. It should be enough, but it's not. It doesn't work like that. When you have ever increasing amounts of new money that pours into the system and the foreign producers are making things that you're trying to make, they're going to do it cheaper than you are, and you can't compete. Like, how do you fight that? You can't. So you have to figure out another way to deal with that. Now, you can find a job that may cut it for a while, and it may be a good one, but eventually it's going to deteriorate, and it's not going to be able to be enough. So what is it that the other people are doing that has now got them on the other side of the wedge, other than being asset holders? All right? Like, everybody was like, I don't want to be an asset holder. Okay, well, you can start business. Right? If you're really good at starting businesses, being an entrepreneur and acquiring it that way and start a bunch of businesses and have people work those businesses and you can get a cash flow doing that, right? It's kind of like having assets, it's like a business. A business is an asset. So you have to start businesses if you don't want to go out there and be like a stockholder, bondholder or something like that, or rental properties. After that, what is it you think you can do? Do you think you can work really, really, really hard? Like put in enough hours in a day? Is that gonna change the way anything is gonna happen out there? I mean, maybe you could vote for somebody who can figure out a way that they can keep their money, their assets, their cash flow, right? And not deteriorate even a little bit, because that feels very bad, right? And anybody who's rich doesn't want to lose any money. So you can't expect to vote for somebody who's going to say, hey, man, we're going to deplete our wealth and hand it to you because that's how awesome we are. They don't do that. That's not going to happen. And never in the history of time has that ever happened or ever will. So there's no point in thinking about that. That's not going to take place. So when we have an idea that, okay, there's probably going to be ever increasing amounts of new money coming in, and it's going to create a split society, those who have, those who have not. We already had that for a long time. But at least if you were a dedicated working class individual, you could acquire something in your life. And since that's not going to work anymore, what is it that we can do, knowing that it's probably going to continue into the future in this fashion? All right. From the youngest age, we have to be vigilant in what it is that we are doing with our time and with ourselves and with our money and our experiences, because it's very easy to fall into the fear of missing out with your friends and parties and all the experiences and all that other stuff. Meanwhile, you have the absolute most grandest of opportunities as an investor to take use of your youth and time. And the fact that compounding interest is awesome when you are young and getting started. If you're old, like I'm almost 50 years old, I'm going to be 50 here in 7 months, right? In a year, in a while. And I think about it, it's just like I just don't get to take advantage of the compounding interest like somebody like my kids can. Something as simple, small, and into an investment that has a return that you can then put back into it over time, accumulating that is something that is not available to most people, because by the time they figure it out, it's too late. So as a young individual, you have probably one of the grandest opportunities in the world to deal with the fact that we have this major inequality that is going to happen into the future. And if you don't do it, you're going to have to really struggle into the future to try and figure out what it is you can do. Like some people just knock it out of the park. They just start a business and bam, right? They just work it and no problems, man. They make all kinds of money. Yeah, that's not most of us, right? Most of us are going to have to figure out what it is we need to do, and probably be very dedicated to that, experience and getting out there and doing that. Now, it's not saying that there isn't an abundance for everybody to have, but to think about like what it is that you need in your life now as a young individual, and plan for that, knowing that there is going to be this widening wedge going into the future. Your ease into abundance could start just by simply getting $50 a month into one of these accounts, just to simply get started, right? And literally, like, you may find that you screwed up in life, you did all kinds of messed up things, but if you were dedicated to that, you may find that the abundance was at the other end of it easier than you might have even thought. All right? But you don't get started now, it ain't ever going to happen. And that goes for just about anybody out there for anything. It doesn't really matter how old you are or where you are and what it is you got going on and you're doing. Like, I think to myself, like, the greatest investment that I could ever possibly have done for myself was to give up alcohol. Whoa. Was to give up alcohol. You guys hear that, right? And by giving up the alcohol, it really put me in a different state of mind. One, I finally had to come to the realization, man, I was not thinking properly. And by coming to that understanding and that realization that I wasn't thinking properly, it did give me something to think about as far as what do you really want to think about, right? Do you want to think about how horrible the experience of the world is with the New World Order and the downturn of the economies and the politicians who just, who don't think or act or feel constitutional? All all this like horrible negative thought pattern that I had, I look back on it and it was like, man, that was exactly the life that I was living, right? It was very negative and very dark and very ugly. And by giving up the alcohol, I was like, I could recognize that. I could at least step back away from it and say, man, what the hell was I thinking about? And then when I shifted that, I was like, well, what is it that I can think about, right? And when I started doing that, it really changed a lot of my like attitude about a lot of stuff. Like, instead of feeling like negative about things, I was actually feeling positive about things, and I would talk in a more positive manner with people. And so when I started doing that, I started realizing, man, I am actually finding the energy of the engagement with other people to be not only a positive one, but a beneficial one, in that it was actually providing me with opportunities. And so when I started looking at it that in that fashion, well, now I'm not looking at the world like it's a negative place at all. It's all positive, like everything about it is, and everything that I was experiencing in the world. paying off the debt, like, I just remember an investor saying, if you are in debt, there is no better investment that you could do than to pay that debt off. Because if you have a debt, especially like a high interest credit card debt or something like that, then it takes a lot of investment. Like, you have to be really, really good at your investment in order to acquire a return beyond that of what it is that you're paying on your debt. So you might as well just pay off the debt, because that high interest and paying off the principal on that so that you don't have that interest payment to make is going to provide you with a hell of a good experience as far as being in the discipline of cutting back on your expenses and putting that money towards a position, right? And the moment that you get that debt paid off, you're an instantaneous flow. Now, most people lose it right there and they go out there and they buy something, like they go back and get in debt again by buying a car, or, just living it up, like elevating their lifestyle, their standard of living. They go out to the bar more, they go and start, just kind of pissing away the experience. So they work really, really, really hard to get out of debt. And they're like, cool, now I'm out of debt, I'm going to relax. And then they don't do anything. And instead, they have like really kind of messed up the discipline that they had developed while they were paying off that debt. Because as soon as they pay that off, man, bang, you're in flow. And now you can start positioning yourself. If you never had anything in your life, now you can position yourself, because you have been so disciplined, holding back on your expenses, keeping your lifestyle as minimal as possible so that you can have that extra money to pay off that debt. Now, if you continue on with that sort of mindset, right, you will be able to position yourself into a secured rate of return. Like, you just have to think about how it is I'm going to do that. Not everybody is going to do it the same. Right? Some people want to do it with rental properties, and other people, like, they want to start a business or something. Like, you really have to figure that out for yourself on what it is that you want, what it is that you want to do to try and be in that flow. Like, the idea that you can be in your day job might work, but think about how far you have to cut back and stay cut back, and then save it into, like, something so simple as treasuries, or, something like that, which is, I mean, don't get me wrong, some people, like, don't trust it at all, but, when it comes to a safe and liquid return on asset, like US Treasuries are really it. There's nothing else. So you can position yourself to, like, just stay way, way, way down in your standard of living as much as possible, and get that extra money and then put it towards the treasuries and hope that it's going to make it. And it very well could, it very well might be able to, like, provide you with at least something towards the end of it. But that's going to be a kind of a difficult road, right? In my opinion, especially if you're just going to be working, a day job to try and do that. Now, if you work a day job and then a side hustle and start businesses and figure out things, and being the entrepreneur, or at least thinking entrepreneur-like, how is it that I can make money no matter, how little it is, but just being in that mindset. Well, if you're in that mindset the day that you pay that debt off, I kid you not, you actually find pleasure in the experience of not necessarily chasing the money, but being successful at acquiring that money. And really, you get that reward mainly by trying to be helpful and useful, so that you can provide something for somebody, so that you can get that return. Right? If you can be helpful and useful with your business, then most likely it's going to be a successful business, especially if it's one that's in demand. And so understanding, like, this mindset difference doesn't have anything to do with blaming the politicians or expectations of them, or anything that has to do with the bankers out there. It literally has everything to do with what you are thinking and what it is that you are doing. Yeah. See, I think about it all the time on what it is that people can do, because they ask me all the time, what is it that we can do? And I'm like, man, I don't know what your skill set is. I don't know what your education level is. I don't know where you are in debt. I don't know what it is you got going on for your wants and needs and desires, man. That's everything is in those questions is so personal that there's no way that anybody could ever possibly answer that question. If you are asking it, it's because you really just don't know what it is that you're doing, or what it is that you have going on in your life. And I know that's probably very difficult to hear, but really you have to ask yourself, man, do I really understand what it is that I'm doing out here? once you have become that entrepreneur, once you have put yourself in a secured rate of a secured interest beyond that of your occupation, and you become the property owner, whether that's through rental properties or even getting into stock markets, owning companies, owning the stocks, to me, that's still property owner, even though it's more like business owner, or not even really business owner. It's just kind of like being a part, like, owning a piece of a company. But all those things, when you think about it, really the mindset that it takes in order to be in that position that you would actually want to do those sort of things really comes down to an idea that you don't feel that this is an impossible economy. You don't feel like it's a failure. You don't feel the threat of it. Yeah. Because if you did, then you wouldn't participate. And that's really where I think where a lot of people are. Like they participate enough to maintain their their life, like to basically do their upkeep, right? Maintain, for their maintenance, and that's it. Most people don't work any harder than that. Like I know people who have a day job, it's just enough to cover the bills and do all that other stuff, but they barely work beyond that. And so when most people are doing that, and then I think, well, yeah, that's probably because 20% of the people out there actually are trying very hard to, be helpful and useful and participate in a way in this economy that they can actually be decent and have a decent life. And then the other 80% of the people kind of complain about everything. You know? I mean, well, just take a look. I think it's funny how I'll title these videos with kind of some, triggering comment or something like that. And then people will comment about how like doomsdayer I am, or how negative I am, or how like disappointing that I am, or have this really horrible outlook on the experience or the economy and things like that. And I think to myself, I have probably, in my opinion, the most realistic view of everything that is happening out there because I am not kidding myself or anybody else. Like, I'm not trying to make it fancy for anybody. I'm not trying to sugarcoat it for anybody. I'm not trying to cheat anybody. I don't even really have anything to sell anybody. Like, I'm trying to sell Patreon, and I mean, like, that's just me doing the same videos, only just a little more detailed out there. But even inside of that, it's not like I really have anything to sell. I'm just out here trying to communicate what it is that's happening within the economy, share it, the experience that I'm having with it. Hopefully the people who are watching, when they share what it is that they have gained from this channel, and other people are expressing their appreciation for everything that we have done here on this channel. And really, I have to thank the viewers themselves, because without them, I don't think I would have elevated to the understanding that I feel that I have about the economy. A lot of people think that, I don't have any clue about what it is that the Federal Reserve is doing with their monetary policy or anything else. And I think to myself, man, I have I have detailed out so many documents and speeches and the words of the FOMC themselves that most people wouldn't like have any idea on where it is that they could even search for the information that I have compounded and put together over the 15 years I've been doing this, and 25 years worth of documents that I've gone over. I think about that research that I have done on this. That doesn't happen from the people who went and got the degrees in economics and stuff like that. The deep dive that I did into it was out of pure curiosity. Yeah. And I wasn't trying to figure out something that I wanted to tell a fantastic story and weave some web, or come up with some conspiracy theory. I just truly, really wanted to understand what the hell the Federal Reserve and the FOMC were doing. And the more I started reading into their documents and I was reading their words, I started realizing, holy crap, they got two communications going. They literally have two communications happening, and they describe how it is that they deliver the two communications. And I thought, holy crap, does anybody realize this? I don't think they do. Right? They taught them in economics. They taught them about forward guidance. But forward guidance is when the Federal Reserve actually delivers you a message that says, hey, we're going to tell you what we're going to do. We're going to tell you exactly what we're going to do going into the future, and we're not going to deviate from that plan. What we got right now is signaling. Right? They signal. And with all the dissent within there, the signaling is very mixed view. They don't know what the signal is. This, to me, is the credible threat theory at play, where they use their words to either confuse, keep the market open-ended, or to deliver to a message that they would then have incorporated into the market before they even pull off any kind of action. We have gone over this so many times on this channel and shared how it is that they do that. And nobody really talks about how the Federal Reserve uses that as their strategy. You know? I mean, it was even funny. We were going over how it is that the Federal Reserve was so quiet about what it is that they did for monetary policy that the mainstream media would actually try and focus in on the size of Alan Greenspan's briefcase as he was walking into the meeting, and to determine whether or not it was a fat briefcase full of documents to try and convince the other policymakers to alter the vote or alter the interest rate, or if it was a thin briefcase that meant that everything was cool and that they were going to keep everything normal and they didn't have any documents to have to share. And I thought to me, man, that is so funny that this is how the market used to try and figure out what it was that the Federal Reserve was going to do before they cut rates, before the meeting and the interest rate adjustments, because nobody knew until they came out of the meeting. Well, now think about how much talking about the interest rates and where it is the monetary policy should be. How many dissenting votes or dissenting policymakers are now, out there in the mainstream media sharing the different views. This, definitely part of the plan. It was something that they, had talked about, described, and now here it is being deployed. And I think to myself, man, does anybody else catch this stuff? Even the idea, I'm sitting here trying to describe monetary policy, and I know it's deep and I know it's hard for a lot of people to wrap their heads around, so I repeat myself a lot over and over again in order to share how it is that this is going down. And then here it is, this accusation of Lisa Cook and how she's going to get fired and Donald Trump is going to fire, and then now it's like, where did that go? Where did that go? That was so important a while ago. It's like on everybody's mind. Everybody was talking about firing Lisa Cook, and she's still there. Anybody, anything? No? Not a whisper. I mean, it was such an important deal, so important. And I'm thinking that is not any, even if you were to remove her, is just one vote, right? Even removing Powell is just one vote. So I'm not saying that these Fed officials are all angels by any means. They have been busted doing insider trading kind of shit for a while now, and they don't get in trouble for it, okay? So it's just to me, I wouldn't be surprised if she did break the law. The idea of Donald Trump firing her, though, I thought that was humorous. Right? It was just it doesn't work like that. You can't just go and fire this chick. They have to actually go through this process of proving that she had actually done something. You can't just go and do it off of an accusation. And so when I think about what it is that the market had anticipated or believed by that information, it was Lisa Cook and Powell to be fired immediately. Right? As that was being delivered through the mainstream media and put out there in everybody's heads, and had them convinced that these two officials were about ready to change and shake up the way the Federal Reserve was operating, they maintained and continued to operate their monetary policy and strategy very much like they had been prior to the accusations and prior to the possibilities of firing. They didn't change one little bit. Nothing changed about anything, right? Except the market did absorb that information. Right? They certainly did that. And they certainly believed that there was going to be, participation with the new administration's idea of shaking up the Fed and putting in all their new players and all these new ideas of how their Fed is going to change strategies and all this other stuff. And none of that happened. None of it happened. Right? I mean, they'll switch players. Don't get me wrong. There's always revolving people going through the Fed. That part won't ever change. Right? That'll happen. But as far as changing the way that the Federal Reserve conducts their monetary policy, that doesn't change. Right? They have a consensus statement, a statement on long-run goals and strategies. That consensus statement is something that they stick to. Now, whether or not they agree on what it is that needs to be done in order to achieve the consensus statement, that might vary between them, but they're all of mind to achieve the consensus statement. Again, nobody talks about that. Okay? All right, I have babbled on for 46 minutes here. You guys have any questions, comments? 127 of you joined in. Buying a home and paying it in 10 to 20 years is better than living in a van when you're older without a job. Yeah, absolutely. I mean, I totally agree with that. But, the idea of being able to buy a house now is not exactly going to be the easiest thing unless you are really disciplined and planned for it well. Most people just want to be able to go to a job, work that job, and then be able to acquire a house and wife and kids and all the other stuff. Like, just live out the American dream like a normal person would do. But that doesn't work. Like, I just kind of taken that idea and I just pitched it. I just, like, that doesn't work. So if you want that experience, it's going to be very difficult in the idea that you're going to do it with a regular day job. But you can do it if you take in on side hustles or business or do something out there that gets you the extra money, because essentially that's what you are going to need in order to acquire that extra to move beyond that of what it is that you already have, which is not going to be enough if it's just a regular day job. And like, buying a house isn't a necessity inside of that unless it's part of the plan, right? And even the idea was just like, well, it's better to have a house and then to live in a van. It was just like, well, I don't know. I mean, if you can like live in a van and save $2,000 a month by living in a van instead of living in an apartment or a house or something like that, and you're totally got your needs met and you're making it and you're healthy and all that other stuff, hell yeah, live in a van. I mean, whatever about the way that somebody would view the way that, like, about that. Who cares? You're saving $2,000 a month. You're going to be able to put that into some kind of return going into the future. And you can do that for a significant amount of time. You know how far ahead you would be than most people out there? But, so I understand sleeping in a van sucks. But then again, a good job sucks too. So it's just like everything sucks now. It doesn't work the way it used to, and that's okay. We can figure it out. Like, it's not a matter of saying, okay, we need to figure out how to put it back the way it was, because it ain't going back to the way it was. And the idea of houses for everybody, well, that's probably not going to be happening either. A place to live, that could happen, but it's probably going to end up being like an apartment, little cubicle looking thing. And that would be reasonable for the average everyday person to have a regular average day job to try and figure out what it is that they're going to do. That's probably going to be their living quarters, is a little tiny spot. It's just like, I know that's not reasonable for most people, but that's probably going to be reasonable considering what's taking place within the economy. Now, if you, again, take in the consideration that you can move beyond that by getting into assets and then collect those assets over time, even if you are living in such, diminished, existence, if in your opinion, as far as not having anything. Just think about how amazing of an amount of assets that you can collect, and not having anything to maintain just gives you more of an ability to collect those assets. So, just take on a different mindset of it. For people who are making it right now, I'm not talking about that. Like, I'm talking about the people who say, man, I can't cut it right now. I can't figure out what it is that I need to do. I'm thinking, there's only two paths that you can take: earn more or require less. How is it that you're going to earn more if you are planning on trading time for dollars when you got people out there who are collecting massive amounts of assets that are paying them returns? You can't compete against that. The more time goes on, the more people are going to do that. I mean, you think like even young people right now have access to go and start buying into the stock market. That's not something that could happen when I was 19. I mean, it could happen, but not as easily as downloading, an app and then just like by the end of the day be, a stock trader. It's just like that was not something that could happen when I was younger, but it's happening now. So think about the group of people who are now accessing assets. That's a group of people who never had the ability to do something like that before. And if you are not in that mindset, those people are going to elevate themselves away. As even if they screw up along the way, getting into the practice of doing it, then they'll know how to do it, even if they were to fail. That's where I'm kind of getting at, is that if you don't start now with the idea that this is the direction that you're going to go, then most likely you're going to find yourself competing against somebody like that, and it's going to be very difficult to try and find the apartment, to get the car, to get the house, because you can already see that taking place. Yeah. All right, 140 people watching. Thank you so much for joining in on today's live stream. I'm just kind of babbling on tonight, aren't I? Houses are like roads. We need housing infrastructure. Yeah. Well, you have to think, like, the reason why we had such a great housing in the past is because the ability for somebody to actually build a house. Like, as an individual person, if you happen to have a plot of land, you didn't really need that. Like, you had to have some carpentry skills in order to get it done, but you really didn't need to be that great of a carpenter in order to get the thing done, right? At least you could get it assembled and maybe, help with some friends and maybe a little bit of, paying a carpenter to help out with some areas of it. But for the most part, they weren't that complicated to work on. And in fact, Sears used to sell kit homes that they said that even rudimentary carpentry skills, you didn't have to have a saw or anything else. All you had to do was know how to swing a hammer and put some screws in and stuff like that. And you could build this entire house. Like, all the pieces were already cut and ready to go. So putting a home together really isn't that difficult. The problem that we now face is that as an individual trying to do that, all the problems that you face with, even just the permitting process of it alone is expensive. But then trying to, like, you got to get the groundwork done, right? You know how expensive it is just to have all this stuff done before you even get to the construction part of it? It is incredibly, like, costly getting the utilities run, getting all the stuff in there, and you haven't even constructed the house. This is like such a deterrent for most people, like as an average person, to go out there and build a home, right? Now, back in the 60s, that was very normal. People went and built their own homes. In fact, it was very common. Everybody talked about it. Everybody did it, right? All the time. But as time went on, it became more and more difficult. The regulations got harder. The expensive it got more. So you had to borrow money to do it. The more you borrowed money, the more expensive those things got because of the asset price goes up when you start putting money towards it like that. And this thing eventually got to the point where the average everyday person couldn't necessarily build their home anymore. And this is where we're at today, where the average everyday person is not necessarily going to be in a position to do that. Well, if that's the case, you're not going to be able to produce a home and then be a homeowner. That is not something that you can now trade. See, like, if I could build a house and be a homeowner, it was just like, well, maybe I could build another house, and then somebody who is comparative to what it is that I can do for my skills can then be trading whatever it is they have, their time, their effort for a house, because we would be sharing the same experiences essentially. But now I don't do that, right? I'm not the one who's going to be building a house. We have to take all this money, time, and effort and energy and get a big ball of money in order to get this house built. Well, that you cannot trade to somebody who's like a waitress, somebody who's, doing mechanics, or maybe, I mean, if you're really fancy, working on really fancy cars maybe, but or working at a really fancy restaurant. But ultimately, you're not going to be able to trade your time and skills for somebody else out there who's building a house, who doesn't have like all this time and money and effort, but just has the ability to get it done. I don't know. Does that kind of make sense? Like, imagine if you have, like, I've tried to work on this analogy in the past, to try and give it something that people could really wrap their heads around. If you can imagine like a sister and brother, and now the sister works down at the cafe, down at the local cafe down there doing waitress, And the brother works over at the mechanic over at the junkyard, right? And he's they both have their jobs. And the brother gets a beater car, and him and his buddies put this beater car together, and it's working, and now it's all running, and it's up to par, and it's awesome by the end of summer, right? Well, his ability to get that car up and running and then, say, sell it to his sister because she's working over at the cafe and earning money, this was an equal trade, right? So he was able to essentially produce a car, make a car happen. Well, now that doesn't really work. Like, even an average everyday kid is not going to go down to the wrecking yard. I mean, probably could, but not going to go down to the wrecking yard, go get a car, come home, fix it up over the summer, and have this vehicle to drive around. Now, I'm not saying that doesn't happen. What I'm saying is, like, back in the day, that was a very common thing to happen. So think about all the people who could have cars. If an average everyday kid could go down to the wrecking yard, pick up a piece or put it together, and then have a vehicle by the end of the summer or whatever, in a couple of weeks and months, they were able to essentially produce a car. Well, now that can't happen. So cars are very expensive because you can't just go get one. Right? Much like, somebody who back in the day, back in the 60s and 70s, might have gone down and just got this car and just had no problem getting it running again and having a vehicle to drive. Well, that would have been something that you could trade to somebody who has your same skill sets. Like, you would be able to trade it to a sister, for whatever money that she had earned at the cafe. All of us could trade that sort of effort with each other. Well, now, if we can't go down to get the car, then you have to go buy a brand new car because you're not having somebody who can just go get one and fix it up and put this thing on the road so that we would all have vehicles to drive. Does that kind of make sense? You see where I'm getting at with this? Is that we ourselves have to be producers of real goods and services that we can trade to each other. We don't produce real goods and services. What we do is we bring in foreign production and then we trade that to each other. And now the only people that's advantageous for is the people at the top who have first access to the money, the people who are importing that foreign trade and selling it to the people down below who then have to shuffle it all around. And we suffer the consequences because this is the very end of the money. When we were producing high quality stuff that we sent out there to the world, the people who were working those factory jobs produced that stuff, sent it out there to the world, and got the money. They were very close to the new money. Excuse me. And being close to the new money means that you get to elevate your standard of living. This is the reason why we suffer the consequences in this economy like we do. I know it's hard for a lot of people to wrap their heads around it because they have put so much time, effort, and energy into thinking about politics being the key to it and the answer to it all. And it's probably the biggest distraction. And that's hard. It's hard for a lot of people to try and deal with that because they want it so bad to be politics because they've studied it so long. And they've got this such a deep opinion that has been formed around it. And they know exactly who it is that they can blame because of it. Now, that is the majority of, like, politics in a nutshell, is blaming the other side for the reasonings of our hell. And that if you just listen to me and I would be right, kind of thing. When on the other side of that, really, we can just look at this and say, okay, well, history says that there is something that will happen if you have ever increasing amounts of new money that pours into the system. What is it? What is it that'll happen? Cantillon effect. All right? Cantillon described it a long time ago, and it's still playing out today. All right, boy, I am just babbling today, aren't I? I just went off for a whole hour almost. Let's go and read some of these. Okay. Neither milk or bread are good for you anyway. Same with sober living. Parking is less of an issue. Can you explain how the ESLR works? No. Yes, I can, but no, I can't in a way that I think is going to be the most appropriate way for you to absorb that information. So I've tried to do a couple of videos on it, and ultimately it's a deeper inner working of the banking system in my mind, it's order to restrict the banking system in a shadow tightening fashion so that you don't actually see it in the right, like the media attention to the Fed's monetary policy when they come to an interest rate adjustment, and that lowering of interest rates is somewhat of an easing aspect to people's minds. Even though none of that is true, when they lower interest rates, they are still above the neutral interest rate, which is less restrictive. That's not easing, it's this less restrictive. However, inside of the mindset of the people, they are doing this to try and support the labor market, which, could be very well true. But ultimately, there is a problem with the inflationary scenario in which that they also have to fight this at the same time, which is to bring that inflationary scenario down, and that has a very elevated very very elevated interest rate need to it. So here you got the labor market that is deteriorating, and they're like, oh god, the Fed has to do something about it. It's their mandate. So they lower the Fed funds rate, but then within the interbanking system, they have this supplement leverage ratio. And essentially, it's like a binding of the big banks in a balance sheet constraint, which means that if they are going to be lending money out there, or if they are going to take on any more assets, they have to acquire more leverage or more supplement of their leverage. And then in turn on that, they demand a higher return on the interest rates because of the demand that occupies their liquidity, right? Like their capital requirements on this. God, I wish I could explain this in a fashion that would just be so simple. I mean, it's a balance sheet constraint. I mean, that's the easiest way to say it, right? And it's because of the size of the balance sheet, and because they're like, a systemically important bank or whatever. They have these particular rules about them, and that if their balance sheet grows to a particular fashion of size, then they have to have a certain amount of capital on hand to basically cover their liquidity needs, right? So they have these capital requirements, and they have these leverage ratios to meet these capital requirements inside of the assets that they hold in order to be liquidable in quick enough fashion to meet the demand of like their depositors or something of that nature. This, again, it's very difficult to just explain it in a very simple manner. Outside of it, it's a constraint, right? It's like a hidden shadow banking constraint and regulation constraint. And in turn, in my mind, this is actually to combat the inflationary scenario, right? So here they can deliver the Fed funds rate, a interest rate cut to the public, and they're like, hey, we're cutting interest rates to support the labor market. But then in the background, they're like, hey, tighten up that banking system so that, we can deal with the inflationary scenario. I don't know. That makes sense to me. Like, I mean, I don't know. Like, again, I would love to do a good video for you that really breaks it down in a way that just kind of like explains it very well. But ultimately, I think really we should probably talk to Joseph Wang on it. Yeah, that guy would probably be able to explain it and like no problem at all. But for me, like I have to study it just as much as everybody else does. And as I'm like looking through this stuff, and I'm like, okay, I get it. I get how like it's in, a constraint on the banking system, but that inner banking game, like how it is that they actually function within their like, daily mechanisms and stuff like that. Like you got to be in the game, right? You got to be like, I mean, I guess you could read it, read up on it and learn how all that works. But unless you have actually participated in the banking game itself, like, Joseph Wang has, or maybe Daniel D. Martino Booth or somebody like that, it's probably going to be a lot harder to, grasp the idea of what that actually is doing within the banking system. But it doesn't mean that you don't understand how it's like creating an environment of tightening conditions, which then is easy to absorb into the idea of what it is that's going to happen in the broader economy and what you can do about that. Like, to me, that is useful information, right? That it's a constraint within it. How it actually operates within that banking system, which is probably pretty useful within itself, although very important. I think the important part of it is like, is that action going to be loosening or tightening the financial markets? That's the important part of it. And since most people hear the Federal Reserve cut interest rates, they think, oh, the Fed is loosening monetary policy. Again, that's not right. They made it less restrictive. And then in the meantime, they've actually have a restriction taking place within the banking system itself that is creating elevated interest rates. because ultimately they're fighting inflation, right? You know. I only have a very basic understanding of the economy. Yeah. Well, and that's just the thing. Like when you study it regularly, like we have here on this channel, and as much as I have, it almost becomes very second nature to me. Like I don't really think about the economy being a complicated thing. I just think about the economic forces. I think about a lot of the things that we learned, discussed here. And for me, it's a very like almost it's very subconscious now in the sense that I don't really look at it as being complicated. I look at some people have made it complicated for themselves. And in that sense, they talk about it in a very complicated way, right? Like I can understand somebody who's like maybe very much into business, have a lot of active in their community, especially if it's a big giant, city kind of community kind of area. And then, dealing with the politics of it, their life and their economy, that the one that they have structured is very much impacted by that. Like their livelihood, their businesses, everything they do, like it's all revolving around the political environment that's with it, that they have involved themselves with, and everything that they got involved with it, right? So that to them is a very big economy that's wrapped up in politics. Now me, on the other hand, I don't do it that way, right? I don't focus in on politics to make my decisions, where it is that I put my money, anything like that. And so for me, politics doesn't really affect me in the same way. Now, I know a lot of people are like, "Oh, tell me how it doesn't raise or lower your money." Okay, yes, politics affects. Okay, they got all that. But what I guess I'm getting at is that it doesn't change my strategy on what it is that I am looking at and feeling and thinking about the economy, especially the things that I think about when it comes to manufacturing, producing here in the United States, good working wage jobs, or living wage jobs and stuff like that. When I hear all these promises coming from the politicians and they spit this stuff out, oh, it sounds great, man. They open up their mouth and it's just like, woo, all this wonderfulness happens. But the truth of the matter is like they don't address the underlying economic forces that will deny them the ability to succeed in those promises that they have put out there, because there's just no way that they can do it. Like the idea behind it, it makes sense, when they, if you were like, oh, my strategy, if you were to listen to this, we could totally, make these things happen. But then ultimately, they are not addressing the underlying economic force that had created the situation. So they're going to fight a symptom. And once that symptom has been alleviated, some other symptom is gonna manifest itself. And this is gonna happen over and over and over again. And now whether or not you blame it on a conservative movement or a liberal movement or whatever that's happening out there, this is the unfortunateness that happens, is because nobody's going to be focusing in on the economic forces that is creating the situation. They're going to look at the situation, at the symptoms of it, and say, this is your fault, and that's your fault, and this is what we need to do to solve that, and that's what we need to do to get rid of this or make this happen. And then the whole time, really, if you look at it, it was just like, do you ever think that maybe it was because of the new money that pours in and the luxurious experience that everybody wants to ever increasingly build their wealth over time and never once want to see it go the other way? And as that happens, the separation has taken place that creates these problems that you are seeing here. Does anybody want to take accountability for their luxurious experience? Anybody? No? Okay. Probably not going to find any kind of solution to this. It's going to go forward just in the same way that we have experienced in the past. So how do we deal with that? Okay. Cut back on our expenses and get into assets so that we can get on the other side of the wedge. And how you do that is up to you. I mean, I've tried to share as many times as ideas and options or whatever, but most people just want to argue with the idea. Or actually go and do it and then share how it is that they're doing it, So it's like those two paths, right? You can either argue it or you can go do it. And it's funny because I love the people who argue with me saying that you can't do it, but yet there's people here on the channel who are sharing with you exactly how they did it. Yeah, and that's what I love about it. It's like I used to be one of those people who says you can't do it. I used to be one of those people who says the New World Order, all this crap, the banking system, is going to hold you back. There's no way that you could succeed here. I was one of those people. I let go of that idea and said, man, maybe I can do things that are a little differently. And I started being able to pay my bills on time, and that was the coolest thing in the entire world. All these people want all this wonderfulness in their life, and the only thing I was really ever asking for was to pay my bills on time. That was it. Like everybody else, it was just like, you don't drive a new truck. And I was like, I don't want to, who cares about new trucks? Right? Who cares about new trucks? Who cares about all that fancy stuff? I'm able to pay my bills on time. That is cool as hell. I never had that in my life before. To have that is like thumbs up to me. Everything else is awesome. Gravy, right? I mean, like to me, that was the best part of the entire experience of any of this stuff. And for a lot of people out there, that ain't even close to what it is that they want. So, you know, what is it that you want in your life, and what it is that you're going to get, and how hard is it that you're going to work for to try and get it, while watching, other people out there struggling to try and figure out what it is that they need to do. This is exactly how the economy works. Some people know how to do it exactly right. How is it that they were able to figure it out so easily? It's beyond me. Some people don't know a thing about economics and absolutely kill it out there. Right? They don't know a thing. They don't know anything about anything when it comes to banking or anything else like that, but they're out there hustling a business and making it happen like nobody's business. And they laugh at the people who don't do it. Right? You don't need to know anything about this stuff in order to be like motivated in knowing that if you are useful and helpful and providing something out there to this world that you'll be rewarded for. People have figured that out, and nobody taught them. Nobody taught them. They just knew it from growing up and just in their experience in life. So when I look at the economy, when I think about it from my own personal view. Like, what is it that I have going on? And what is it that other people have done to themselves and their own economy? Because each one of us own our own, whether we want to believe it or not. It's the same reason why somebody can be in the gutter right now and then move themselves up to being a wealthy millionaire within no time at all. It happens. They own their own economy. There ain't nobody else who did that for them. It wasn't like the politicians went and did that for them. They did it for themselves. All right. Freddie's done with basketball. Uneducated Economist. You guys let me know.